Hello, this is Cryptolyze. I hope you are well on this Sunday, 17 September 2023. We meet today to talk about BTC with a question that is important, that is on the minds of many people, which will be, can BTC become the equivalent of digital gold? Can BTC become the trusted currency? This is really a question that is important in the rhetoric that we find a lot around cryptocurrencies, like that BTC will dethrone gold, or in any case will be its digital substitute by its capacity to be limited in its offer and its capacity of accessibility. The fact of mining, whether it is mining gold, whether it is mining BTC, the term is not trivial, and today's reflection will be precisely that. What is needed for BTC to be adopted as a trusted currency? What is needed for it to be? For it to replace gold, or in any case for it to be, or the version of digital gold? And we will already ask ourselves the question, is it feasible? In what time frame? And what does it actually take to get there? Are these elements being put in place? Will we see him during this bull run or not? And you will see that the elements in question are really very interesting when we start to get into the finesse, and that allows you to understand the world of cryptos, the world of Bitcoin, and what we are really missing for take off completely. So already we will start with the definition of what a safe haven currency is, because overall this is really the crux of the matter. We know that gold is in itself the safe currency. We know that it is the element which, when we have a crisis, will be valued, or even it's something that is constantly being valued. There are sometimes small retracements, but we are in something that is more or less constant. We'll look at the graphs later, but it's really this notion of consistency and importance, because gold, for a very long time, for hundreds of years, has had this role because it has existed for hundreds of years and it has been used for hundreds of years. And it's really important is that the notion of trust, in fact, comes mainly from this important notion of time, the notion of temporality. The more it is there in time, the more it stays. Gold has survived all other currencies. It is the very principle of gold. That is why we say that a currency is backed by gold. That means that it is a currency trust. It is a currency in which we can have confidence because we know that we have an expenditure on gold, something which has ended with the dollar since the end of the Bretton Woods agreements. But we are in a process where we must understand that trust comes initially from temporality. It will remain over time, the more confidence we will have. There are several points. There is one, this notion of temporality. There is the notion of pure trust in relation to something else. And that we are going to talk about that with a representation here of the U.S. banks, so which is a proposed ETF, in which it is the representation of the U.S. banks with this very strong wick that we see here in March 2023, and it's SVB, and that's the American banking system. And we know that we have a pure lack of trust between the American banking system and Americans. And this is also valid in Europe and almost everywhere. Namely that the banking sector has not become widespread. We still have more than 20% of the population who do not have a bank account. And we must understand that the notion of the relationship to money, to property, to the capacity to be able to buy, to the capacity to be able to invest, which is money, we have always had a distrust in the entities that own them and keep them for us. And that's why we're really in this notion of trust and distrust. Because when we had this SVB crash, we had this notion behind it, which was built where people went for a bank run. So that means they went to the bank. Recover the money, except that there was not enough to ensure, because there are several things we must understand the banking system in the sense that it is not only deposit banks, that is to say that they recover your deposit, but they do not keep it in a safe. They will transform it into bonds, therefore into treasury bonds or other more or less risky assets, in which they will obtain a return. And there is a standard which is ruled, I believe, in France. In Europe, it is 8%, but we can go as far as that's a little more. And since 2008, we're moving forward, it was less, and we actually increased this liquidity margin. That is to say, we are obliged to have 8% in real and the rest in assets. And that implies when we have a bank run, that is to say that everyone tries to withdraw at a given moment, we have to sell our assets. And when we are in a bear market, when we are in a liquidity contraction, so at a given moment, the assets are no longer worth the same price. So we are forced to sell them at a loss. And this loss, we are forced to impact on people. So there is no longer enough money to recover. And that was really felt. We saw people going to SVB with briefcases to fill the briefcases with money and return home with what? With cash. And it's important. It's the notion of keeping cash. It's the principle of keeping cash at home, of having access to cash. And when we had precisely this fall in the SVB of SVB and other banks and a regional banking crisis in which the Fed still reacted to preserve many things, but that does not prevent the fact that this crisis led to a downward movement here very strong, and conversely a very, very strong upward movement at the level of BTC. We had a transfer of liquidity that took place, not equivalent of course, but there are some people who decided to transfer their liquidity in what? In BTC or in stablecoin or in crypto, in which we have this adage, which is not your key, not your coin. If you don't have access to your money, it's not your money, and that's the principle we saw there. And so the crisis of confidence of one can lead to a loss of confidence of the other. That's why I'm explaining this to you. That is to say that the monetary crisis that we have seen and that we are still seeing, it is still the case. We know that we have a very strong complexity at the level of the banks. Regional, for what? Because American Treasury bonds have devalued. All right, if we quickly look at the Treasury bonds, you will quickly understand that we are going to find ourselves in something which is low, which is really very, very low. We are at 93 when we look at December 2021 at the beginning. Okay, we still made a small plunge of less 40%. That is to say that overall those who did not take out insurance for the fall, the reduction in fact of the jumps find themselves potentially at minus 20, minus 30% on the assets that they have, so they are unable to be able to repay if there is a good cron. Thereupon, the Fed acted in which it offered loans at the current price of market. That is to say that there is no sale, there is no discount, and at the current price, we could borrow for the representation of these assets by putting these assets as collateral with the Fed. But that doesn't mean we know that it's a latent solution. We're talking about 20-year-olds, but that also implies that there are two possibilities. Either the bonds increase again, and therefore at that point the American banking crisis restabilizes, so there is no problem. Either we have to wait for the end of these vouchers, the end of the tickets to recover the money plus interest, and we will get back the amount we put in, so we will be able to repay. It is once again the notion of time, and that is really very important in investment. It is very important in many things, but even more so in what is happening there and in the concept of trust currency. And so is this loss of confidence in relation to this representation that we have about American banks sufficient to consider that, in fact, we will have a valuation of BTC through a currency of trust? I tend to tell you no. Yes, we can have an injection of liquidity that we have seen at the level of SVB. We will have many other things that will be done. But why is this not the case? Because we already have very strong communication from the American government that cryptos are evil, cryptos are fraudsters, cryptos are the reason we got this. SVB was a crypto bank, don't you understand? Signature Bank too. So overall, they are the ones who trashed the American economy. This was the narrative we had during this candle. This is during speeches before the Senate. So we are denigrating the solution as being a solution other than the dollar. Yes, here we are going to talk about the dollar because, yes, obviously when we talk about BTC, a trusted currency, we are going to face the dollar, which has been in free fall since the 2000 years. We are not going to hide it, 2002, in which we had a first bearish acceleration retracement, second bearish acceleration. And this is a little bit what is also happening with the establishment of the BRICS, which are in the process of withdrawing from the dollar in international monetary transfers to pay for the various exchanges between the different countries. To pay for their oil, to pay for their gas, we no longer use the dollar. In any case, they are eliminating that. So it has complexities. It's not easy to do it in which necessarily depending on monetary transfers. It's not one for one. That is to say that someone will buy a lot more from the other. What will the other do with this person's change? Well, there are elements of monetary exchange that need to be resolved. But that does not prevent us from seeing a decrease in the effective dollar. So this implies a decrease in the strength of the dollar. The dollar was trusted for many things. One, when it was backed by gold. And two, when he was strong, is he still strong? Right now, we are rather in a descending phase, which is being confirmed today, in which we have done a retest in this zone. Therefore, a bullish retest in which we will redirect towards a bearish retest to then begin the decline. In any case, this is the vision I have. It is the vision of the construction of the dollar. And so we can imagine BTC as being a new form of trusted currency that could replace the dollar. But here we have to ask ourselves the question, will the Americans let this happen? Clearly no. Whatever happens, whether it's Democratic or Republican, no matter the elections, even if it's going to have a role, no matter the elections, it won't happen that way. The dollar must remain the dollar, at least in the minds of American policy. So we are in a process where the two will come into confrontation. But at that point, what will happen? What's next for BTC? I'm not saying that BTC cannot become a means of trust. For the moment, I am just saying that it will take a lot of time as usual, and that in all cases, there will be a connection that will be made with the dollar. Will the dollar be backed by BTC? Why not? Knowing that we have abandoned gold, why go back to something else? But that prevents us from imagining that. But we are in a process where at some point we will have to have a transfer made, and it will take a lot of time as usual, and it will not happen overnight. On the other hand, we have elements that are specific to that. What can make us have a BTC which will appreciate in relation to the dollar, which will increase in value in relation to the rest, and which can become a trusted currency in other countries which are not therefore linked to dollarization? We are really in something that is different. Well, in this case, we have several things. We have the ability to have access to BTC. That is the most important. Why did gold itself have this ease? Well, quite simply, gold jewelry. We have access to gold quite easily. In all houses, there are always family jewels, jewelry or grandmother's jewelry, wedding rings, things like that, where it is gold. This metal is accessible, in fact, generally, and it is this notion of accessibility. And for me, BTC becomes a currency of trust when the time is right, but especially when accessibility comes. And we are not going to hide the fact that with the denigration that we currently have of BTC, it will take time. The denigration we have of crypto will take time. And the technology itself, which underlies everything that we have been explaining just now, takes time to develop, and accessibility to this technology takes time to develop. We cannot ask Madame Michu to go to her Bitcoin wallet, to create a Bitcoin wallet, to tell her, listen to your wallet. Bitcoin, if you lose the key, it's over. It is not possible. At present, this is completely impossible. And the digital divide, which is a reality, that is to say that when we look at people who are 70 years old, the majority have difficulty accessing everything digital using the internet and that. It is a reality. It is less depending on certain countries. There are always exceptions, unfortunately, but that does not prevent it from being something which is complicated to manage. That means that there is a part of the population which will be totally abandoned. And that is why, for me, the real notion of accessibility will have to go through a notion of compromise. And that Bitcoin will not be a trusted currency for me because it will be absorbed into traditional finance. And that is a little bit of what is happening. And for me, this event will take place through the acceptance of BTC spot ETFs in the USA. For what? So already one, because we have the giants who are in the USA, it's not for nothing. They are the ones who offer the most of compound products and complex financial products in which they will necessarily incorporate BTC spot ETFs for the notion of volatility. And because we already have a liability, we have this liability there. I think you have already talked about it. It is the gold graph, and this little red arrow is the appearance of the first ETF, spot gold. We see that since then we have had a big acceleration. We're going to take a little step back in which we had the November 2004 validation, and then we had a lateralization phase for 200 days. And then we had a bullish acceleration. But that doesn't change the fact that we were already in an upward momentum. On the other hand, what is certain is that we had a colossal injection of liquidity and that this ETF was incorporated into complex financial products as a phase of stability and became a standard in investment in which we say that you need to have between 5, 10, 15% of your portfolio in gold to be able to counterbalance volatility. That depends on the investor profile, et cetera, the whole process that goes into it. But also, what is important to note is that since we had this acceleration phase, which ended in 2011, we have had a lateralization phase, which is very strong. A phase of lateralization which comes from manipulation, everyone knows this, which is a manipulation on gold, in which gold prices are maintained at prices below 2,000. It's a bit of representation, which is this phase of lateralization through what we call paper gold, which is compound ETFs. And for me, we could very well enter this phase in which we will have an upward acceleration with the injection of liquidity, a stabilization of the price, therefore a reduction in volatility to enter a phase of long-term lateralization. And the element that is important to consider is that here, gold has never had a truly bearish cycle, as we have seen with BTC. This is why the elements are, once again, different, and why the notion of temporality will come into play. Concretely, what prerogative do I have in relation to BTC? It's simple. I tend to tell you that we will have the validation of the ETFs, despite everything that is happening, despite all the resources that may come out. The SEC and our friend Gary Gensler of their hat, we will have validation at some point of ETFs, spot BTC. There is no doubt about it, and as a result, we will not have an upward acceleration straight away. No, we will have the opening. Yes, we will have the creation of compound products, so we will perhaps have a small injection of liquidity into a first, and then we will have the inclusion of this ETF and these ETFs, because there are several of them. This is also valid for Ethereum in complex products, which will be offered to institutional investors to seek returns. And once again, this notion of yield will be dependent on what? She will be dependent on risk. That's the principle. If I have a return of 10% and I have a risk of 20%, I will perhaps go for the lower return, which is 5% with a risk of 0, which is the case for US bonds. Remember yesterday's video? So we are really in this process, and that is why we must take a step back. Yes, the BTC can become a trusted currency, but is that immediately what we are looking for? Not necessarily. For me, it's going to take time, and I don't want it to become a trusted currency, and that's my personal opinion. Right away, we must still have phases of speculation. We must still have bull runs. We must still have a technology which must mature, which must be accessible, which must be integrated into traditional finance, and there we will ask the question of ideology. At what point will the cypherpunk ideology, which is behind Bitcoin and the fact of owning one's own Bitcoins itself, remain in this absorption, in fact, of BTC as a financial asset in a traditional finance which is hated by the cypherpunk? We are really in this process, and I think that we will have a shock at a given moment which will occur between ideology and reality. And we will have to know which one will win. It is possible that we also have a strong art which is made in place where we are the cypherpunk and ideological BTC, which remains straight and which will always remain constant, and next to a BTC which passes into traditional finance and therefore a double BTC with two images. And so there we will have to ask ourselves the question of, will BTC always be BTC? Which will be BTC? And this is always the big question we ask ourselves with the notion of blockchain. I will end by saying two things. One, for me, we are in a period which is of lethargy, in which we will remain in a period of range which can be quite high. We can consider 25-0, 30-0, or even 30-0, 15-0, whatever. In fact, the important thing will be this part. It will be the start of the bull run. It will be the moment where we will have an injection of liquidity, which will be done by a FOMO, by communications, which will be driven by a very strong notion of speculation. And this is where we will have a BTC, which will be attractive. And this is where we will see an increase in the attractiveness of setting up spot ETFs in complex products to seek out the volatility, which this volatility gives way to yield for these products. And this is where we will see a real injection of liquidity. This is where we will perhaps see moments where BTC will reach targets that we do not suspect before being integrated into something else. And that is this integration of something else that we try to project and to. For me, it's not this cycle. It won't be the next cycle. I think we need to give BTC and cryptos in general time to mature, to have a technology that becomes simpler, very important. The notion of simplicity with communication that is much more uniform, and precisely the integration into a cycle, which will evolve. A banking cycle in which we will have, perhaps through a form of decentralization or confidence shown by the proof, through why not the ZK proof, in which we are able to prove that, in fact, we have liquidity. And at that point, this crisis of confidence in the banking system will be resolved by the blockchain. And why not BTC? But will that make BTC the trusted currency? I do not think so. Tell me what you think about it in the comments. And if you ever like the videos, don't forget to share and leave me a like. It always makes me very happy. And it supports the work I do every day for you, for me, for us. And we'll see you tomorrow, 7 o'clock, for the daily.